Hey everyone, so Citibank just dropped something massive. And honestly, what they're telling us about crypto right now is absolutely game-changing. We're talking about insights that could shape the next few months and years in this space, and with how crazy the market looks today, this is something you definitely need to hear. You know what drives me nuts? Every time we see a price dip or a major crash, it's like everyone suddenly gets amnesia about all the incredible developments we've been seeing in crypto. I'm talking about 12 plus months of genuinely positive news that just gets completely forgotten the moment red candles show up on the charts. And guys, that's a huge mistake we can't afford to make. So let's dive right in with something we talked about recently, the OCC. Now, this might sound like boring regulatory stuff, but trust me, it's anything but boring. The OCC just announced that banks can actually hold crypto to pay for blockchain network fees. Bloomberg reported on this. And while it might sound like a small detail, this is absolutely huge. Think about what's really happening here. Regulators are essentially saying, hey, public blockchains, yeah, those are legitimate financial infrastructure now. And gas fees? Those are just normal business expenses for banks. This is basically the government quietly telling US. You're not just watching from the sidelines anymore, you're expected to actually US crypto rails. That's incredible. And here's where it gets even better. Cryptos R Us shared this update, and Justin added some crucial new information. The OCC has officially cleared US banks to hold crypto right on their balance sheets for on-chain operations. Let me put this in perspective for you. This is the biggest policy shift we've seen in the banking sector's relationship with digital assets since 2020. Banks can now hold crypto as collateral to pay for gas fees or even to test crypto-related systems. We're literally watching years of restrictive guidance get thrown out the window, and suddenly major banks have the green light to engage directly with public blockchain networks. And this explains exactly why we're seeing such a massive shift from these big institutions right now. But wait, there's more. We got another bombshell update, this time from the Basel Committee. Big shout out to Bank XRP for bringing this to our attention. The Basel Committee is actually rethinking their super restrictive crypto rules. Why? Because regulated stablecoins are absolutely surging, and major banks are pushing hard for more practical guidance. This comes from a Financial Times article, and while I can't access the full piece, Subject to Views broke it down for us perfectly. Here's the kicker. The Basel Committee is overhauling crypto capital rules because both the US and UK have completely rejected those insane 250% risk weights. Those rules were forcing banks to hold $1 in capital for every dollar of crypto, making it literally impossible for banks to touch Bitcoin or stablecoins. It was completely unworkable. And finally, sanity is prevailing. Now, while we're talking about all this incredible institutional adoption, I need to address something serious. Crypto exchanges, and I mean this, are not safe. Size doesn't matter here either. Just look at Bybit, the fourth largest crypto exchange by trading volume. Back in February, they got hit with one of the biggest crypto hacks in history. We're talking $1.4 billion stolen. When you look at the top 10 crypto hacks ever, most of them trace back to major exchanges. So here's the million-dollar question. Where do you store your crypto when cold storage isn't practical? But here's where it gets really interesting. Chair Eric Thedine is admitting that a completely different approach is needed because of all these global regulatory rifts, according to the Financial Times. And why does this matter? We're talking about potentially unlocking billions in bank crypto adoption. When you combine this with what the OCC just announced, everything is perfectly aligned. All these restrictions around big banks and crypto, they're melting away in the most positive way possible. I'm honestly so excited about this because it's giving all the major banks the green light to completely flip their stance on crypto, which is exactly what we've been waiting for. And guys, just look at what's been happening over the past few weeks. Bank after bank is coming out saying, hey, we want to dive deep into crypto. Let me give you some recent examples that'll blow your mind. In November 18th, Amina Bank just secured a license from SFC to offer institutional crypto trading and custody services. Here's the kicker. They're the first international bank to get this approval. Then in October, Spain's second largest bank, BBVA, announced they're letting retail customers trade Bitcoin and crypto. That's massive. November 11th, SoFi Bank launched crypto trading. making them the first nationally chartered bank to let consumers buy, sell, and hold crypto directly. And here's my favorite one from November. DBS Bank and JP Morgan's Connexus are building a brand new interoperability framework for tokenized deposits. Picture this. Clients will be able to move digital dollars between Ethereum and DBS's network. It's like Swift, but for crypto money. And these are just a few headlines I grabbed. This is happening so frequently now that big banks are shifting into the crypto landscape. It's incredible. You know what this reminds me of? That video clip from October 30th, where JP Morgan CEO Jamie Dimon, who's been super negative about crypto for years, completely clarified his stance. He said crypto is real, and that stablecoins, smart contracts, and blockchain will be used by JP Morgan to make better transactions. Listen to this.
Skeptical of crypto at one point. You're still skeptical.
I've gotten away with no damage so far. Crypto is real. It can mean blockchain, stable coins. You have a JP Morgan deposit coin. You can move stuff. Smart contracts are real. All that stuff is real. It will be used by all of us to facilitate, better transactions and customer service.
It will be used by all of us to facilitate better transactions. And who's us? The big banks, obviously. Right at this moment, when we're seeing rules getting clarified around big banks potentially testing blockchain operations or tapping into blockchain-based transactions, it's crystal clear confirmation that crypto is finally getting integrated into the banking system. This is absolutely huge. Now, like I mentioned at the beginning and in the title, Citi Bank has officially sounded the alarm. What are they telling us exactly? While the entire crypto market is panicking, Citi CEO Jane Fraser is cutting straight through the noise. She's talking about clients who want to move money around the world instantly, 24/7, 365 days a year, safely and without friction. And guess what that is? That's tokenization. Global banks are extremely bullish on RWAs. Check this out.
Tell us why you're so excited about tokenized deposits and why maybe that is a better solution than stablecoin.
Yeah, on the payment space. Look, it comes back to what does a client need? So a client wants to move money around the world instantaneously, 24/7, 365 days a year, safely and without hassle and complexity. And that's what tokenization does. Tokenization digitizes entire markets. And we've been working in really making sure that we can serve that use case from the clients. We've been adding new markets for being able to move money instantaneously 24/7. So we just announced that we're adding another currency on. We're adding euro on today, in addition to dollar and sterling and Hong Kong and Sing dollar. We've got 24/7 clearing attached to our digital token services capability. That's added 270 banks that we can move money. So it's not just within the Citi system, but it's also to other banks that we can move instantaneously 24/7 without complexity. So I'm really excited about the movement that you can see in payments. I think tokenization best serves the client's use case.
When we think about tokenization, it truly is the future. We're going to see tokenization affect every single market out there. I don't think people really understand how significant this is when you hear the CEO of one of the top banks in the world telling us, hey, this is happening. It's happening right now. We are behind it, and we want to make sure this becomes reality. We've been hearing from Citi on multiple occasions about this. What's even crazier is that the CEO of Bitwise just quoted a video that Altcoin Daily posted. But here's where things get absolutely mind-blowing. This is straight from Yahoo Finance. We're talking about a $1.7 trillion bank here. Citi just announced that the liquidity squeeze for Bitcoin is ending. They're saying that going forward, Bitcoin's liquidity squeeze should actually improve between now and year end. Hunter Horsley put this perfectly. The year is 2025. Who's on TV explaining the pullback in crypto and why it will turn and head higher? Citi Bank. What a time to be alive. That's exactly right. This is Citi telling us that liquidity is about to improve. Listen to this closely.
In your note, Dirk, correct me if I have this wrong, we're trying to find explanations for what's going on with Bitcoin. Were you pinning that on tightening liquidity?
That is one of the explanations. So there are a couple of things going on in Bitcoin that are interesting. First, there was a flash crash in early October. And that, for Bitcoin itself, it was a 14% move down over 2 days. Maybe not that drastic, but some of the altcoins really got sold much harder. And after this flash crash, we saw that the flows into the Bitcoin ETFs and so forth really changed. So the flows really never recovered, and so retail was apparently somewhat shell-shocked by that day, and we saw outflows. The other thing that happened is that I think a lot of the institutional investors trade Bitcoin with a bit of a trend-following mindset, and so we broke some of the moving averages that they tend to look at, and that is also reducing the source of demand. But the third point is what you were mentioning, and that is that the liquidity, which we measure by bank reserves on the Fed balance sheet, dropped by a bit more than 500 billion. And that happened because the Treasury increased the Treasury general account at the Fed by selling a lot of T-bills. And there were two reasons for that. One is why this TGA account was so high. One is that that during the government shutdown, the Treasury didn't spend as much, so that account rose mechanically on the back of that. But secondly, they did sell more T-bills than is typical, and so we are thinking going forward, the liquidity squeeze, so that explanation for the Bitcoin weakness should actually get much better, because we expect TGA to at the very least flatten out and probably decline, meaning bank reserves and liquidity should improve between now and the end, partly because of the reopening and partly because the Treasury sold so many T-bills already.
The fact that we have Citi Bank on mainstream media explaining how crypto is going to improve and how the liquidity situation for crypto is also going to get better is absolutely wild to me. They're literally telling us that crypto is the future and that liquidity conditions are about to turn around. And here's something that'll blow your mind. If we go back to June of this year, Subject to Views shared this incredible update. Ryan Rugg, who's the global head of digital assets at Citi's Treasury, told us that their clients want a next-generation global payment system that's always on, multi-bank, multi-border liquidity and payments. Check this out.
Do you buy into the idea that payments innovation has plateaued, that things are really broken? How do you react to that particular proposition?
So I don't know if I would say we've hit a plateau, but for the most part, especially in country, payments are pretty efficient. You start seeing, but when you start having to go cross-border and having that always-on infrastructure, that matches the speed of the internet. So like the thesis statement that our clients have given us is they want always-on, multi-bank, multi-border liquidity and payment.
Is that all?
That's it. Very, very simple. Very simple. Just those things. So, from the Citi perspective, we've kind of taken a two-prong approach, right? We're updating our legacy infrastructure. We've created products like real-time liquidity, Spring by Citi, 24/7. In addition to thinking about more of the innovative technologies like blockchain and how that could transform the industry. Because as you said, one of Citi's, strongest attributes is our network. We move $5 trillion a day. We have 19,000 clients. 85% of them are Fortune 500 that want payment and liquidity that match the speed of the internet. So how are we going to do that, right? How are we going to build that? So we've kind of taken a two-prong approach in addressing that.
So if we were to look under the hood, is blockchain technology absolutely critical to realizing this always on, anytime, anywhere, to anyone vision?
So I've been in this space for 10 years. I've worked at fintech startups, I've worked at large global system integrators, and now working at a bank. It is 100% not needed if it's just within one organization. If you're just going to set up a blockchain within your organization, will it add efficiencies? 100%, but it is not needed. You could have a database with a security wrapper. But when you start to connect disparate parties on a network that don't necessarily trust one another, you do need that. And what's unique about this technology versus others, because at Citi, before we built Citi Token Services, we evaluated multiple technologies out there, not necessarily blockchain. And some of the attributes of blockchain that were really different was, one, the programmability of it, smart contracts, which is unique to this technology. So for instance, with Citi Token Service, if my account in New York drops below 100 million, send money to Singapore automatically, instantaneously. So when we're thinking about digitizing the whole process, if it's from payments, liquidity, trade, whatever it is, automation is needed, right? So I think in certain cases, and then disparate parties. To connect multiple parties on a network, that's what this technology was developed to. Distributed, right? Distributed ledger technology, distributed across multiple parties. You need a technology through cryptography that is encrypted, that your information is safe. So I think that is unique to this technology also.
Citi already has a digital assets tab on their website. But the fact that we've transitioned into this period where the biggest banks in the world are now telling US about the future of crypto, they're explaining the technology to us. It's absolutely crazy to see this shift happening in real time. But here's what I think. Now is honestly one of the best times to listen to what these institutional players are telling us. Why? Because the market is down right now. The market absolutely sucks at the moment. But they're telling us exactly what's coming next. Every single bank will soon be on-chain. Tokenization is going to completely revolutionize the way money moves around the world. 2, 4, 7, 365 days a year. The future for utility-based networks that can handle this kind of scale? It's extremely bullish. And listen, this isn't like any regular sell-off. No matter what happens, no matter how big the drop gets, it's not going to affect my reasoning for why I'm investing in these utility-based projects. I'm still incredibly bullish on the future of utility-based projects and tokenization. And we're being told exactly why we shouldn't let these major sell-offs shake us, and it's coming from the biggest banks in the world. The tune has completely changed over the years too. These same big banks used to be super skeptical about crypto, the technology, and the entire future of this space. Now, they're telling us, hey, the future is crypto. Why the change? Because they finally realized where things are headed, and they understand that this technology is extremely efficient, and they see what can actually be accomplished with it. So with that being said, I hope you guys enjoyed this breakdown. If you did, definitely smash that like button, subscribe if you haven't already, and turn those notifications on so you don't miss any of these massive updates.